Guys, welcome back. Let's get started. I think it's gonna favor us now. This network is just to favor us. Even though I'll try by all means to get this recording soon. So, okay, guys, let's just go straight to the chat. Okay, guys. I think now is the right time for us to start. Let's just start and save time. Guys, as I told you, this is for our chat. We're gonna be identifying our BOS and the CHoCH here on this time frame. If you can see, if you can check, by the way, we had an uptrend in this condition. This was a bullish run. If you can check here, only buyers were in control of the market. And then how do we see which there's gonna be a failure of this bullish trend, or there's gonna be a breakout of this bullish trend? We now apply our CHoCH. If we check here from this level, remember this is a 4-hour chart. On this zone that I will identify here, we had a level of CHoCH. A CHoCH is the break of structure. It's a thing. If you can be able to check, this is our CHoCH. A CHoCH is a level where the market managed to break and clear the previous swing lows. By that way, it shows you which this market structure is now invalid. The bullish market structure is invalid. Then from there, what do you look now? You look for a reversal, because you know which the market won't be able to come back after a CHoCH. This is the CHoCH. And then after here, this level, you know, the market won't come above and clear or create a BOS, continue going up. We know the market will just push up a little bit, but for now we are looking forward a bearish movement from that level, from that zone. Do you understand? Fine. Then if you can check here using a 4-hour chart, we know what, okay, the market won't come and break above this level. If you can check, it won't come break up above this level. So this is our level where we can be able to set the stop loss above. You understand? We know that the market won't come and break above this zone because we had a CHoCH, a change of character on this blue highlighted zone. Then from there, if we check using a 4-hour chart, what do? We have to be expecting a reversal on which level? We're having a bearish order block here. Here's a bearish order block. Before I switch to a lower time frame, this is a nice bearish order block. You know how I draw an order block, guys, so don't be surprised. An order block is just the previous green candle before the start of the bearish liquidity void. So if you can be able to check, this order block was not 100% activated, but then if you can see, it was something that was valid for us to take a trade somewhere around these rejections. This was a nice confirmation that the market is starting to reject on an order block level or zone. It shows that the market is failing to push above. Then sellers is where they are starting to get in power, in control. Simple like that. So now if you can check, what do you see? A simple upcoming a bearish trend. Check. Now the market is going in a zigzag format, in a zigzag way. As you know that the bearish trend, it goes in a form of zigzags. Simple like that. So if we go back now, we are switching to a lower time frame. If we go to a hourly chart, this is our hourly chart. What do you see? Simple. This was a nice CHoCH on the H4 chart. Then this was an order block on a what? On a hourly chart, H4 chart, before I started even coming back here. Then here, if you check now, first thing you know, the market won't come and break above these previous highs here, initial highs. And then if you check another thing, the reason the market was pushing up from there to there, it was creating or giving you a fair value gap. We had one fair value gap, then we had two fair value gaps here. Fair value gaps is a zone where the market candles, they don't meet. This was explained on the previous session where I even made a PDF about fair value gaps. So here we were having a high opportunity of getting the sell trades that we are looking for, because this is a zone of fair value gap, a fair value gap. And then the market managed to refill this fair value gap and started trending down. Fine. So now let's say maybe you find the market somewhere around this level, somewhere here. What do you do to catch or to join the trend? We do this, go to M15. If you check on the M15, everything is moving nicely there, if you can be able to see. Okay. To show that, or to see that the market is favoring sellers, you can check the biggest candles that are taking place here are the bearish candles. Okay, let's go back to H1. Then I want to show you something we call, okay, let's go back to H4 before we go there. So if you can check, the market crashed from here, or it went down, it created an impulse from here to there. So how to catch this trend, or how to join the trend? You don't sell anywhere on this zone. It's where now you can be able to start identifying what we call a flip zone. And a flip zone is something like this. This is a flip zone. A flip zone, it's a market, it's a zone where the market will come and give you a retest on the previous swing, a low or swing point. Simple like that. So if you can check here, the market created a retracement, but it wasn't exactly, we didn't get a nice retest there. So sometimes you get a retest here exactly, and from there, when the market pushes up, because now you see it had broke the bull structure, and then it will start, it will continue going down, and then again you come back again. You identify or expect to get another flip zone, something like this, guys. You know, the market doesn't go straight down, it goes in a form of zigzags. So it will come again, and here after clearing this previous low, the market will go down, and from this level it's where you can be expecting to get a flip zone. This is a flip zone, guys. So this is a level of flip zone. So from here, after, the market can come and do something like this. This is what we call a flip zone. A flip zone is a strategy that you use to join the trend. So you see, this is what we call a flip zone. Then from there, you expect to join the trend by placing sell trades. You see, this is how the trend moves. So it can do this pattern several times. You see, it's what we call a flip zone. You know this, guys. The market doesn't go same time. I will show you some flip zones. You see, from there, it's where you can be expecting to get a flip zone. And if you check now, so I couldn't be able to send this signal, it has been crashing in front of my eyes. Yo, someone is eating. So guys, this is what we call a flip zone. A flip zone is something like this. Guys, couldn't be able to trade these spikes, no. So a flip zone is a zone where the market will manage to retest on the previous, either swing point or swing high. And then here, it will go like this. Simple like that, guys. This is how we trade flip zones. You see? So even here, you can be expecting another flip zone on this zone or this level. So this is how the market moves. It moves with flip zones. And simple like that. So this is a H4 analysis. Do you understand? So now you can be able to switch to a lower time frame as 5 minutes to be able to join the trend on a lower time frame. So if you check on a lower time frame, the tricky part is that people are finding it hard to identify entries. But then using a PC, guys, it's another advantage, because we know okay, if the market clears this previous low, which is on a higher time frame, it's identified on this level. You see, you don't erase anything. There is nothing special on a lower time frame. You just follow your analysis from a higher time frame. So on a higher time frame, this is something that we're going to be looking at for the market to come back here and give you a retest so that you can be able to join the trend itself. But then if you check here, this is a H4 chart. Sometimes the secret, guys, that's why the market doesn't have a memorandum. So there is no right time. Sometimes you just try to get imaginary entries. In such a way, if you can be able to check here, guys, the market didn't manage to give us an accurate retest on the flip zone. If you would check here, check what happened. You see, the market just crashed before that flip zone. You see, so this is how we do it. So mostly you can sell the market the moment the market is approaching your flip zone. You can place sell trades and then sell stop loss above the flip zone. Then I've managed to identify the flip zones for you. So let's go back. If you can check now, it's crashing so hard. It's crashing so hard. So I want to show you something on spikes. So if you can check the way these spikes are moving, you see, even now we're gonna get another spike. So the moment the spikes are accumulating, are moving like this, there is a moment where sellers will end up having a long or a huge volume. When I talk about volume or momentum, you see now how it is. We might have another big spike. The market will end up crashing like this, crashing so hard. So we're gonna be expecting to get more long spikes from this level. The moment how they move. So the moment they give you some green bars, it's where you enter more trades. That's how we do it on spikes. So let's just identify some other blocks on spikes on how to join that trend. So also using the fair value gaps. So now, guys, allow me to erase everything here. So if you check something, guys, if you can clearly check nicely here, let me zoom in. We are having an order block in this such level. Okay, let's go back to H4. Guys, identifying an order block on a H4 chart is very simple because it gives you some nice entries. So let's go to H1. I want to show you some fair value gaps that you can use to join this trend. So if you check here, guys, this is a bearish movement. This is a bearish movement. You see, this is a bearish movement, but we are having a certain level here where the market manages to come and respect and start crashing. So this was an order block. So the moment the market goes down, you can be able to identify these order blocks. This was an order block. This was a valid order block. So I think we are able to see this one. This was a bearish order block. How did I group this order block? The moment the market is crashing and it comes and give you some green candles on a bearish run, identify that zone as being a sensitive level of reversal. Now, so this was a valid order block here because we are looking for sell entries. So the market, once it pushes up, this is an order block, guys. If you check, let me simply, we got another spike. I told you the spikes are going to shoot out. And then if we zoom nicely, then here's an order block. This green candle, it was our level of order block, bearish order block, you see? And then the order block was migrated or was activated on that level. So the best way of getting an order block, you have to use a pending order. So if we go back to M1, check M1, what happened? M1. You see the spikes are still crashing. I mean, crash is still going down, it's melting, but then we're still going to get more spikes that maybe some spikes like these ones. It's just that this one is a PC, guys. They might seem to be small, but then they are big. So anyway, let's switch to another pair, or I mean, not pairs. These are not pairs, are synthetics. So I want to show you something, guys. That on a higher time frame so that you can be able to see nice levels there. So if you check here, guys, check how this thing is moving. This is a VIX 50 first index. You see, which it's very, I can say it's very volatile. And the moment it's volatile like this, it's giving you it's giving you nice scalping opportunities if possible. So if you can check this one, guys, here I want to show you also fair value gaps and also identifying CHoCH and BOS. But then let's just go straight to a lower time frame. Let's go to 15 minutes. So guys, you can be able to use 15 minutes to scalp this watching synthetics. So guys, if you check here, this one guys is nice because it's following like SMC concepts on a higher time frame. Then if you check here guys, you can see this was the uptrend from this level. We had a nice uptrend there, and then here's the levels that I want to talk about. You can see these are the levels that I will talk about. We had a higher high, I need to hear about higher high, and then this here is our lower high, and then this one lower high again, and then this one higher high, simple like that. You can see, and then another higher high. But then here we had a CHoCH. Where is our CHoCH? Here, you see, it's simple like that. A CHoCH. Here's a CHoCH, guys. You can see this one, and then let me just erase everything here. Let me just erase everything and draw it as a zone. So you can be able to see that we had a nice CHoCH there, a nice CHoCH, change of character. This is showing you that the market is no longer following the bullish market structure. And then for now, we are doing what? Looking for selling opportunities. There one. So this is our CHoCH. We know which after a CHoCH, the market will push up, and then where or what is it that we have to look for so that we can get the reversal. So here, if you check, guys, we had a breakup block. This was a green candle, remember? This was a green candle. And then if you check what happened here, check, simple guys. They want. So we're looking for selling opportunities inside this zone. So if we can go back to a lower time frame, let's go to 5 minutes as we are coming from 15 minutes. The moment, that's why you see when you go to a lower time frame, it becomes hard for you to identify that level because it's kind of, I can say it's kind of volatile. And then on a higher time frame, everything is easy. So check guys, here it's our breakup block from what? 15 minutes. And then from there, we are looking to do what? To sell. So what is it again that we can do now if we want to join this bearish trend? Now we use flip zones. Check here, guys, simple thing. You see this one, this rejection is showing you, or let's just use the previous swing low. So guys, nothing will come easy or will come simple for you. You can't be able to spot some level, but then you have to eat carrots, guys. You must buy carrots because the Forex can't be giving you nice clear entries. So if you check here, this is our 15-minute time frame. We can see this one, we can call it this one, or we can call this level our lower low. And then here it cleared the lower low, it come back, it's giving you a retest, but we know with the market won't come and break above like this one. But then it will come and do what? And come retest from this zone and start going where? Down. Then if you go to 15 minutes, it's where you can use 5 minutes, I mean a lower time frame to set your risk management. So let's say your entry is here. You enter here or anywhere below. Then where do you set stop loss? For those who love using stop loss, you take your stop loss here, and then where do you set your TP? And then you set your TP because you know with the market it must crash from here. From there, at least maybe you can use this level or previous low as your TP one. You see, because you know what, okay, the market broke the bullish structure, it has to start doing what? Selling. Simple like that. They want. And then let's go to week 75 and check if we can be able to identify any of the current strategies that I want to show you. So guys, if you check week 75, this is currently moving up. This is an uptrend. It's currently buying. If you can check, it's moving up. It's just that it's kind of volatile. But then if you can see nicely, you can see that here we are having a bullish structure. Yeah? So this is our identified zone of being bullish. So what do we do here, guys, to be able to join this trend? I will identify these levels, simple things. There is someone who's drawing there, and I will remove the person, and I will also block you from attending my sessions. If you check, guys, this is our lower This is our lower low, ne? Then we drag it. This is another second lower low. Then we drag it. Then we drag it. Another lower low. It was here. If you can check, it was here. So what do we expect? We expect the market to come and give us a reversal before this level. So this is what we are expecting from VIX 75. We are looking to buy soon VIX 75, and then from there it continues trending up. Do you understand? So this is how we use market structure. And then TP1, you can set your TP1 here as a level of break of structure, because you know it's okay if it goes from there to there, then it will break this, or it will clear this previous high. And then here it's our what? BOS, and then BOS point of intersection or interest. So if you check, guys, the reason that is giving us a buying opportunity, it's because you can be able to see which, okay, the biggest candles here are bullish. So the reason I'm telling you this is because they have identified or highlighted which we're gonna be also using momentum and volumes. So volumes and momentums, guys, they help us be able to identify which market participants are strong in the market. If we check here, the people who are taking place or who are having a high pressure are the buyers, because you can see the way the bullish candles are delivering themselves. They are big candles. The moment we see big candles, this is a strong momentum of bullishness. Right? And then the moment we see a high volume of buyers, it's when the market is moving nice in a clear, identifiable bullish trend. Simple like that. So then if now we switch to a 5 minutes time frame for us to be able to get some more entries, we know that, okay, the market, the moment it's doing this, we're having the imbalancement somewhere like here. You see the market trended up, only buyers were in control. So this one, it's buyers, it's unfair to sellers because sellers didn't get a chance to be able to sell. So the moment that the market is trending down this way, it's just correcting this gap, or it's just filling this unfair gap to the sellers. Do you understand? From there, now we are expecting the market to come and retest in this zone and start moving upwards, because it will be it will have corrected this or fill this gap. You see, the market here just trended up or just ran away in a bullish way. So afterwards, the market will just come back and refill this gap. Then from there, it will start trending up. This is what we call fair value gaps, and together with the momentum. So that's how we do it on synthetic. So let's just let me share a new chart on currencies or indices. So guys, if you can be able to see here, we are having a chart of currencies there. Then this is just the Euro USD, the normal Euro USD, the currency pair we use. We trade the major currency pair. So let me it's fine. Let's just go back to 15 minutes. I want to show you something, guys. You see how the market was moving here. Let's do 5 minutes so that we can be able to identify clear levels. So guys, this is just a daily price movement. You can see I'm having my period separators there. And then if we go back to 15 minutes, we're having something like this. Guys, let me show you something like this. The good part about currencies. If you check, this is a fair value gap on a higher time frame. Do you see this, guys? What's a fair value gap? You know now. I won't be explaining to you, you know. So what will happen here, guys? The market, you must know, it crashed. You see, it was favoring sellers from there to there. You understand? From here to here, from there to there. Only sellers were in control in the biggest move. So if you check how this candles was responded. This, it was an event, if I'm not mistaken. It was an event that created such fall down or drop in Euro USD. So what you must know, guys, before Euro USD, even if it's trending down, the thing that it must do, it must come and do something like this. I'll even take a screenshot, guys. You'll see what I'm talking about after some time. The market, it will come, it might take 3 days to come inside this zone. From this zone, the moment it's coming back here, it's giving seller buyers some opportunity to also participate in the market. Just imagine, guys, you know, this thing is it's working on the force of demand and supply. We buy, others sell. We buy from those who are selling. Then we sell to those who are willing to buy from us. So if the market it keeps going down, who are the people who are going to be buying? No people. You see, even you guys, just imagine going to town. We're having maybe 50,000 people who are selling, but then we're having 10 people who are willing to buy from those people. You see, which it's unfair. So the moment the market creates this move of coming back to this level or this fair value gap, this is a fair value gap on a higher time frame. But then we are using 15 minutes. So the market has to fill the previous gap or it has to push up. And the moment it pushes up, it's giving buyers an opportunity to also participate in the market. From there, the market will start doing what, even if it's a strong downtrend. Once it comes inside this orange zone, it's where it can be looking to sell. Simple like that. Do you understand? So the market here, it might sell anywhere, but as long as it's inside this orange zone. Guys, you see now I'm taking a screenshot of this analysis. I'm gonna be showing you the results afterwards. So now what do you do if you want to trade Euro USD? Now the only thing that you do, you look for buying opportunities so that you can be able to eat from here to there. Simple like that. And then you can go to 5 minutes time frame. What do you have to identify on 5 minutes time frame? You can be able to identify levels of point of interest. Point of interest is a level where the market will do this. So the moment the market it's doing this, so this level is our point of intersection or interest. Simple like that. So now the market can do that level. You see, check. You know, guys, this thing it moves in the form of zigzags. We had many buying opportunities here. Do you see this? And then now the market, it doesn't mean it will crash, maybe go down like that. No. The thing that it will do is something like this. It might create a point of interest here and start moving up until to a orange zone that I've identified. So now the thing that we have to do, you can use other blocks, split zones, bank's liquidity levels, or fair value gaps. Fair value gap that it's currently taking place here is this one. If you check here, from there to there, the candles didn't meet. That's a fair value gap. You see? So fair value gap here, you can use it to get an entry level. Fair value gap. You see? Or if it doesn't manage to take this or to follow this fair value gap, we're having other blocks again. So if you check, if you are entering here, you can buy now. Set stop loss where below the previous swing level, below this level. You see, below this level, stop loss there, and then TP. Don't be asking me about TP. Already I showed you. I showed you where's our TP. I showed you our TP, it's there. You see, from there, stop loss there to there. Then if you check the risk to reward ratio of this trade, it's currently worth it to take. Check. We buy from there, TP, you see, green. This is a nice reward to risk ratio. One. This is our TP there. And then where do we set our stop loss? Stop loss here. So you see, Gucci, you win to win the green level, but you lose the red level. So you see, Gucci, everything becomes simple there on a higher time frame. A red. Where's the red? It's not the straight red. So you see, Gucci, it becomes a valuable setup for you to take. something like this, guys. So this is how we do it, guys. It's not about magic. SMC. So you see, good here, we are using, this is a fair value gap zone. Then you buy here, TP there, and then stop loss where here. Then go back to 5 minutes time frame. You see, it already it's approaching that level, fair value gap. It's now starting to go up. Or if otherwise, let's do this. If otherwise, you can use an order block. An order block, it's here. It's gonna be something like this, but same reward to risk ratio. It's gonna be something like this. For the market to come inside this zone and start buying there. This is gonna be our order block. Simple like that. So unfortunately here we don't have a flip zone. And let's scroll back. I want to show you something before. So before the session ends, I want to show you something. Yeah. I think I got what I want to show you. So guys, if you can check this one, check the scenario here when we talk about imbalancement. If you check what I told you, the market will run up, will run up. You see, it ran up, but it was unfair to sellers. Then it will come back and retrace there from where it started. Then from there, it will start doing what? It will start moving up. And from there, it will start moving up. Do you understand? And if you can be able to check there, check what happened. Check what happened. You see, it trended up from that level. So this is gonna be the thing that I'm talking about. Then from here, I'm ending the session, guys. I think I showed you a lot of things, even though this was just a summary. You see, this is it's an imbalancement. Then from there, the market will trend up, will run away from that level, and then for afterwards, it will come back there and refill the zone. After refilling, it will start trending up. You see, which like from that level, like from here, you were able to get this trade. You were able to get this trade. And then if you can be able to check, this trade was taken, it was around 5.4. So it was a nice trade to take there. So guys, I think we can't be able to manage to finish everything in one day. But here I was just showing you the imbalancement and the fair value gaps, and also joining the market trend using order blocks and also fair value gaps. And then using a high time frame, guys, is very nice because you are able to identify levels, and also exit levels is gonna be easy for you to identify as long as you are using a high time frame. So you see now, this is our current movement for EURUSD. I will take this screenshot again. So from there, we are done with our session, guys. Any questions are welcome via inbox. If you didn't understand any part here, you can meet me inbox. Or if I talked about something that you didn't understand, you didn't know, maybe like BOS, how to identify them, fair value gaps, I have previous recorded sessions which are already uploaded on YouTube. So guys, I think this is gonna be the end of the session. So tomorrow I'll be going with the VIPs on identifying and showing them how to trade premium and discount prices. So anyone who's gonna be willing to join the VIP can check me via inbox, guys. I really appreciate your presence on this session. Peace. So we'll meet again in the next session. So these are my WhatsApp tests for those who don't have them, and then you can ask any question that you didn't understand somewhere, somehow here on the session. And good luck, guys. We'll meet on the next session next time.